Hello, I'm Rich Pawson, business cycle analyst, CMT. Today I want to talk about the super cycles of the stock market. The chart I exhibit is the Dow Jones Industrial Cash Index. And we've set it up as an annual bar chart, but it's a log chart. Okay, let's look back in the 1930s when there was a super cycle bottom as large as 216 years. The trend is up into the 2030s to maybe as late as 2042. And then we will start the true 100-year bear market, meaning for all the analysts that have been talking about a crash and an end of the world, and they've been doing this since at least 1980, if not farther back, they had a chance to come clean, get caught up, if you will, with the 2009 Great Recession bottom. And if they didn't do it, they're now going to be wrong. No end of world to after this 2030s to 2042 peak for the 216-year cycle. And I've done research back in the 1800s when we had a 100-year bear market and found that the economy went on to new record highs anyways, and eventually the stock market and eventually commodities. And so I fully anticipate, so long as the true end of the world does not occur in the next 100 years, in fact I wouldn't be surprised it's thousands of years away, then really later this century we're probably going to see still new record highs for the stock market and economy. It's just to be a little less sustainable. We'll have a sprinkling of a few more serious bear markets along the way during the latter half of this century. But for the moment, it's a super cycle bull market relative to the 216-year cycle. We're in a 100-year bull market, not a bear market like some of the mega bears like to discuss. Okay, we can break this trend down into smaller cycles. We have a 72-year cycle, and the 72-year cycle bottom did occur in 2009, and it was also, by some economic measurements, the worst correction, setback, whatever you want to call it, since the Great Depression of the 1930s. Now, the 72-year cycle breaks into two 36-year cycles. And so even the smaller super cycles are up until the 2030s, 2042. For cycle tops, we also have a 72-year cycle top coming into the 1960s period and just ahead of the heavy inflation of the 70s on in 1980. And we have another peak here coming into the 2000 era. And then it just simply is going to top out for 36, 72, and 216-year cycles during the 2030s to early 2042. Now, this is the stock market model. You may have noticed that when I speak of commodities, I also throw in 27-year and the 54-year Kondratiev. Commodities and the super cycle realm actually do something different, tops versus bottoms. In the stock market, it's simpler. Okay, I think that simplicity, however, comes from denial at times, and we simply keep the stock market up for too long and therefore too high. At any rate, the super cycles are up, and the best we have for the bears over the next few decades is a 9-year cycle, which is not a super cycle by my definition. It is a major long-term cycle. It probably relates to the juggler cycle, although I believe in a different definition than most juggler followers. The 9-year cycle is not due to top until later this decade, and as far as the economy, it relates to about a 7 to 12-year trend of a growing economy, and then the 1 to 3 years of contraction, otherwise known as a recession. So we will get a bear market by the end of this decade into a 9-year cycle bottom, and relating to a recession. Then we're going to get a bull market next decade, and then we'll get another pullback towards the end of next decade to the early part of the following decade, and then we'll get the final bull run into a 9-year cycle top that's going to coincide with cycles as large as 216 years. Now, this chart doesn't show the 3-year cycles, but there are 3-year cycles that basically claim there's a bottom every other year. I have found various fundamental data, economic data, and markets that it ranges 2 years to 4 years. 2 years is extremely rare. It has to almost fit perfectly within 2 calendar years. For the most part, it does run 3 years on up to 4 years. And I would kind of discount the idea of 2 years. Best I can tell you for the 3-year cycle is it probably is up into next year. It could be up into 2016. And so I will be looking for various corrections along the way. But for the moment, I'm bullish right into year end 2014 for the U.S. stock market. I think the global markets follow the same cyclical model. I'm looking for bull markets on a country-by-country basis for the next 3 to 5 years as well. And also, I'm a super cycle bull, but for the moment, I think the U.S. is the leader of the economy, quite possibly the leader of the stock market. And again, super cycle-wise, I think you have to be bullish and a bit cautious of the bears. They could be a distractor. I realize they perform a function of making sure we don't pay too much for stocks, but I also fear that too many people will not invest appropriately for their future years in terms of trying to make some money out of their assets here. I'm Rich Pawson. Thank you.